Live trade experience. Okay, so I promised us that each and every trading day that I'm going to be trading, I'm going to be sharing with us the breakdowns. Okay, so I did one yesterday, and this is the series, the episode of today's breakdown. Okay, so if this is your first time of coming across this channel, please subscribe. Okay, turn on the notification bell, so you get notified whenever we upload our weekly contents. Okay, so now today's trading was kind of it took me unaware, guys. I have to be honest with you, it took me unaware. Okay, now me promising you this series is me actually coming out clean and sharing with you, with every one of us, what I actually did today. Okay, so remember my bias was bearish, right? My bias was bearish, and we had these clean lows. Okay, we had these clean lows right here. Okay, so now none of this had happened yet. Okay, none of this had happened yet. So and this is my opening price, 12 a.m. midnight. Okay, so now looking at this, the London key zone, sorry, actually opened up right here. Okay, going up one more time. You can see when the London section opened, this was the first swing high, right? So I'm hoping to go short on this market today. Actually, okay, I was looking for short because my buyers said um I am bearish. Okay, so I should be looking for short entry, right? So which was what I actually did, and this was my first swing high after prior to the London Q zone opening. Okay, so now price went above it. Okay, price went above it and going down, went down to my lower time frame. Okay, this is the 1 minute time frame. So now this is that old high right above the opening price, 12 a.m. midnight. Okay, so now price went above it and created this huge displacement. Okay, created this huge displacement and you know created this fair value gap. Okay, so I was like, okay, this was my first entry, so I got this first entry, and I was looking at these clean lows, these clean equal lows. Remember when I talked about the situation whereby we have the bodies, long wicks, we are to be looking at the bodies, right? We use the bodies instead of the wick. Okay, so now going up further, I was actually hoping price will reach for this clean low right here. Okay, so I got my entry around this area, which is what you can see here. Okay, this is the first swing high. Okay, price went above it, grabbed liquidity, created this displacement, and this was my first trade for today, right? So now I took out my partials right here. Okay, I took out partials and trade my stop loss, and the next thing that came was actually like a surprise to me. Okay, so as you can see, price retraced and stopped me at a break-even trade. Okay, so now to sum it up, what I actually did today was I had one win position and I actually had two losses. Okay, I ended up giving back to the market what I actually made for this trade and losing some of my capitals as well. Okay, so now this is the trade. As you can see, a 4 pip stop loss, and we had a 12 pip. Yeah, I took my partials, right? We had a 12 pip. So price turned around and went up. Okay, reversed on me, right? So I was still looking for my for sales, right? I was still looking for sale, and as soon as price traded above this old high, okay, I went in short again and I got stopped out. Okay, so in other words, I had two losing positions and one win, and I ended up giving back to the market what I made from this first trade. Okay, so now in today's, I'm going to talk about what I did versus what I should have actually done. Okay, so this right here is what I did today. Okay, this right here is what I did. Okay, so I went in with my bias. I went in with my bias as as a bearish bias, right? Got my first entry right there, then I was stopped out. Okay, so now what I should have actually done is this. Okay, now this is the New York Q zone, this is the New York Q zone. Okay, so now before I go down to this, I would like to start from the top. I'd like to start from the top, right? So this is the daily time frame. Okay, this is the daily time frame. This is what I should have actually done today. Okay, and rather this is what I should have actually done today, and I did exactly the opposite. Okay, so now prior to today, in one of our previous video on daily directional bias, okay, when I did the breakdown on the early, it should be on Sunday of this week, right? I talked about the Aussie dollar reaching for these old lows. Okay, and I also talked about this fair value gap, that there might be a possible retracement into this fair value gap, then a continuation lower. Okay, before price might reach before price will reach for this old low. Okay, so we had already traded below this old low right here, taking out sell side liquidity, right? So price should actually reached for some level of premium, because we had a discount right here being already reached for. Okay, remember we talked about price reaching for and opposing liquidity, right? So price had already reached for some level of discount, and we should see it reached into some level of premium. Okay, so now at the time of making this video, uh, we are actually in the New York afternoon session. Okay, but I decided to, not to take any entry today. I just closed for the day, and to avoid trading out of emotion, right? So so I talked about this, but the mistake I did was I didn't look at this time frame. I didn't look at the daily time frame. My main focus was just on the intraday charts, right? So I'm actually going to talk more on that a bit. Okay, so I just wanted to show us this time frame, hence to why I had some losses today. Okay, so this was the reason why I had some losses, and I'm going to talk more about it when we get to that. Okay, so let's go back up now. What I did today versus what I should have actually done. Okay, so this is what I did. I went in looking for sell. Okay, I got my first entry right here, a 12 pip move, then a reversed price reversed on me, right? Stopped me out. I tried taking more two entries, and got stopped out. Actually ended up losing some trade. Okay, I lost two entries today. Okay, so now this is what I should have actually done. Assuming I had look at my daily time frame, and understand the current market environment. Okay, I didn't pay attention to the current market environment, of which I will get to. I will talk about later on in this video. Okay, so now this is what I should have done. This is our New York Q zone, right? Remember we talked about calibrating the opening price for each session. Okay, the opening price for the opening price for midnight, the opening price for London, and the opening price for New York, right? So the opening price for London will be on this candle somewhere around here. Okay, so now talk now sorry, this is the opening price for the New York session, right? So now this is what I should have done today. Okay, this is what I should have done. This is price opening, right? Now what is the first swing low prior to the opening price? As you can see, we had this swing low formed right at the opening price or prior to it. Okay, so we are looking for one of these two swing lows or swing highs. We are looking for a swing low formed prior to the to each Q zone's opening, or at the Q zone. Okay, so definitely this was formed at the New York Q zone opening. Okay, so we had this move right here. Okay, we have price creating a kind of double bottom. Price went up and broke down, right? Broke down, grabbed liquidity, trading below the opening price. Remember we talked about our high probability setup for buy entries will be to look for old lows taking out below the opening price, right? So that is exactly what we have right here. Okay, so this is the opening price, this is the opening price, this is price trading below the first swing low, below the opening price, right? Taking out the uh the sell side liquidity resting below here, and those that had their self stops below here, their order were activated, right? So now going down further to the lower time frame. Okay, so this is the opening price on the New York. Now that is that old low right here, price traded down below it. Then this is our shift in market structure, right? Shift in market structure, and our entry will be right there. Okay, so this is our entry. Now taking a look at this, you can see we had a low, then we had a higher low, a low failing to go below the previous low, right, creating a higher low instead, then a shift in market structure, fair value gap created. Okay, so this would have been my entry, right? This would have been my entry. Now assuming I missed this would have been my second entry, and this would have been my third entry, right? So now that is what I should have done today. Okay, that is what I should have done. Now that would have given me a profit of 29 pips, right, using a risking 3 pips stop loss, right? 3 pips stop loss. The last value is actually the pipette. Okay, this is the pipette, and this is the main pip. Okay, it's quoted to 4 decimal places, right? So now we have the 3 pip stop loss and 29 pip in return. Okay, as you can see, we got filled right there. I didn't take this trade, guys. I didn't take this trade, but I'm just pointing out the mistake I did. Okay, if I had seen this, okay, if I had seen this, if I had understood the current market environment, if I had paid attention to the current market environment, this would have been my trade result for the day. Okay, so now I just want to remind us that the purpose of this series is not I'm not actually going to try to paint the I'm not going to paint the picture of being perfect, guys. I'm not going to try to paint the picture of being perfect. I have losing trade at times. I make mistakes just like everyone. I'm learning just like everyone, guys. So this would have been what I should have done today, but I was busy looking for sales. Okay, I was busy looking for sales, and I paid less attention to my market environment. Okay, so going that further, now this is that daily time frame. Okay, this will bring us to the concept of market environment and market condition. Okay, so I talked about this retracement, but I didn't actually look into it. Okay, so now going down to furthering this lesson down. Okay, so now I'm going to talk about the mistakes I made, the lessons learned, and some extra notes. Okay, so now the mistakes I made is that I only focused my attention on the 12 a.m. New York opening price. Okay, so now we talked about calibrating each session's opening. Okay, that if we have a situation, let's go back up. Okay, if we have a situation in this example, as you can see, we had this opening price right here for the 12 a.m. midnight, right? So we had this opening price right here, and we have the opening price of the New York session right about here. Okay, now we talked about the situation of when we have the opening price of the 12 a.m. midnight low higher than the when we have the opening price of 12 a.m. midnight lower than where price is actually trading at, we are permitted to use the opening price of each session. So in other words, we had this opening price lower than the opening price of the New York session, right? So you can see the New York session is price is actually trading closer to the New York session opening compared to the midnight. Okay, so this should have been the one my attention should have been on. Okay, so that was the first mistake I made. I was only focused on this. Okay, I was only focused on this, that is because of the fact that I was my bias was bearish. Okay, my bias was bearish, so all I had in mind was just to look for sales. Okay, so now talking about buyers versus market conditions. Okay, talking about buyers versus market condition. Now the second mistake I made is that I ignored the higher time frame, current market environment narrative, okay, focusing only on the intraday time frames, okay. So in other words, I ignored the current market environment, okay. I ignored the current market environment, and I was only focused on my intraday charts and daily bias and my bias, okay. So now the lessons learned is that I learned from today's trading is always calibrate the opening price of each session, okay. So in other words, if I am going to be trading from I used to do this, but I don't know why I actually stop, okay. I don't know why I actually stop, and you can't really blame me. I'm human and I'm prone to make mistakes, right? I'm prone to make mistakes, and this is the opening price for the new for the midnight for the midnight, right? So I should have calibrated this out, and at the same time calibrate the opening price for the London session, which is this, and at the same time calibrate the opening price for the New York session opening, okay. So that is going to be on my chart from now on. So what I have learned actually today is that even though you are not going to make use of it, they should be right there on your chart, okay. They should be right there on your chart, because when they are there on your chart, they might likely tend to grab your attention, okay. They might likely tend to grab your attention. So assuming I had this on my chart today, my opening price, I would have been able to figure this trade out, and I would have known that something's actually up with the trend, okay. Something actually up, in the sense that I didn't pay attention to my market environment, but this would have tipped me off, right? The opening price of the New York session, this, which is this, right, would have tipped me off on some changes, and I would have gone up to the higher time frame to check the current market environment, okay. So me failing to have this on my chart was what resulted to this failure, and my focus on only on the time frame, on my bias, okay, on my bias is also contributed to this, okay. So now the second lesson I learned from today's trading is that even when you have determined your daily bias, always check on the market environment. That is it expanding, which is the impulsive phase, or is it retracing, which is the corrective phase, okay. So now that will bring us to an extra note, guys. I didn't actually plan for this extra note, but I saw the need, because trading is more like comes with experience, okay. Trading is more like experience, okay. So now today's experience has really taught me a lot, and I have seen the need to you calibrate many extra how am I going to put it, I saw the need to really calibrate extra measures, extra confirmation, confluence in my charts, okay. So which is what I'm going to be doing from now henceforth, okay. So now the extra note is, as we can see from today's trade, knowing your daily directional bias is not enough, okay. So with what we have just seen, I was right on my bias, okay. My bias was bearish, right? My bias was bearish, but knowing this was not really enough, okay. As we can see, knowing this was not really enough. I knew my directional bias, but I didn't pay attention to my current market environment, okay. So that resulted out to the loss I incurred today, okay. So now, so in other words, knowing your directional bias is not enough. You also have to be aware of the current market environment, okay. And there are two types of market environment, okay. We have the impulsive move and the corrective move, okay. So now, had I paid attention to my bias and market condition, I would have been able to avoid this loss I made today, okay. I'm not saying trading is perfect. I'm not saying there are not going to be losses. There are actually going to be days that you are going to make mistakes, just like I did today, and it's going to result to losses, right? So but at least you have to you have to be able to identify the mistakes you made and learn from it, okay. That is just how it takes to be a consistent. So now, like, I paid more attention to my daily bias, and I ignored my environment, okay. So we are going to go into the concept of market environment, okay. So now, the current market environment, there are two types of market environment. We have the impulsive move and the corrective move, okay. most of us are familiar with this. Okay, we might not actually know the name it is referred to or it is called, but we are already familiar with this. Okay, so now when we say impulsive move, okay, this is the movement of price towards the intended direction or the overall directional bias. Okay, now the corrective move, which is the retracement phase, okay, this is the movement of price against the intended direction or the overall directional bias. Okay, so now going down further, we have this example right here. Okay, so for bullish bias, this is our impulsive move. Okay, this is our impulsive move because this is the movement that went up in the direction of the overall trade. Okay, so when we are bullish, this is our impulsive move. Then the corrective move is more like the retracement. Okay, we are all quite aware that price move in pattern of wave movement, right? So we know price pushes up, retrace, breathe out, breathe in, breathe out, breathe in, breathe out, breathe in, and so on and so forth, right? So now the movement that actually goes in the underlying, that goes with the underlying bias, okay, is known as the impulsive move. Okay, so now the movement that goes against the underlying bias is known as the corrective move or the retracement phase. Okay, so now the market is in always is uh, uh one is always going to make this move. Okay, when going, when trending, when going towards a particular direction, or if it is bullish, it's going to create the impulsive move, the corrective move, the impulsive move, the corrective move, the impulsive move. Okay, so now this was what actually caught me off guard today. Now for our bearish buyer, this will be our impulsive move. Okay, the movement that goes towards the overall bias, okay, the overall directional bias. Then the movement that goes against it will be the corrective move or the retracement. Okay, so this is our impulsive, this is our corrective, impulsive, corrective, and impulsive move. Now going down further, we had a directional bias which is bearish. Okay, so now this from here to here is our impulsive move. Okay, this is our corrective move, then this is our impulsive move, corrective move. This was all a single impulsive move, right? This was all a single impulsive move. Then it created a minor corrective move, impulsive move, and now it is on the corrective phase of it. So the current market condition is the current market condition is in the corrective phase, which is the movement against the overall trend, because currently we are bearish. Okay, so this is the correction, right? This is the breathing in. Okay, so now this is the breathing in and the breathe, and we have the breathe out phase, right? So now this was what I failed to pay attention to. Okay, so I was thinking we were still in the impulsive move. Okay, in other words, I was thinking we are still expanding. Okay, the impulsive move is referred to as the expansion phase, right? So looking at this from here, this is our impulsive move, the corrective, impulsive, corrective, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, consolidated, okay, and expand. Okay, you get the point now. So now this is one of the two things you should also pay your attention to. Okay, now the easiest way to know if we are exiting, if we are changing from one phase to another, okay, if we are changing from the corrective to the impulsive, from the impulsive to the corrective, is going to be looking at this three candle formation pattern. Okay, the swing lows and the swing high. Okay, so now this candles pattern is a three candle pattern. Okay, we have the candles high, the low, and the candle that is higher to the right side of it. Okay, so now for our swing low, we have a candle that has the higher low to the left side and the higher low to the right side of this candle. Okay, so this is actually our swing low. So when you see this, you should know that there's actually going to be a retracement. Okay, either a short-term retracement or a long-term retracement. Okay, so this indicates the turning around, or how am I going to put it, the changing from one of the market condition, either the impulsive to the corrective. Okay, so I didn't pay attention to this. This is actually Wednesday, right? Tuesday and on Monday, right? So I didn't trade this day, and though I demo trade. I didn't do it on the live trade, right? So because I don't normally trade on a Monday. So this was actually what gave me my sell on yesterday, right? This week downward, though it was a corrective day, but I had some sales, okay, because of the week, okay. So today was actually just expanding higher. So this, when we see a move like this on the lower, on the higher time frame, when we see something like this form on the higher time frame, we should expect some level of correctiveness. Okay, we should expect some level of correctiveness. Okay, so now I talked about this fair value gap being reached for. Okay, by the time of making this video, price was seriously expanding towards the daily fair value gap, right? Because measuring this range from this high to this low, price has already reached to some level of liquidity, right? Discount. Okay, so we should expect it to reach for the opposite liquidity in the premium sector, right? So now price is likely going to trade into this fair value gap, okay, before, if it's going to continue lower, before it will continue going lower. And we just have to wait. So tomorrow I'm actually going to be watching out for this. Okay, I'm actually going to be watching out, so I'm not trading again for the day. I'm done for the day, and that is just that. Now, impulsive move, like we said earlier, is the movement of the price towards the intended direction or the overall directional bias, right? Now, the corrective move, this is the movement of price against the intended direction or the overall directional bias. Okay, so now we have, this is the corrective move in case of an uptrend. Okay, we have this, the retracement, corrective, impulsive, retracement, impulsive. Okay, so now for a bearish bias, this will be our corrective, our impulsive, and our impulsive, right? So now, what is the market condition? Price is always in one of these two market conditions. Okay, now we have the trending market conditions and the consolidating market condition. Okay, so the trading market, this is when price is creating series of higher highs and higher lows for an uptrend. Okay, so when market is creating higher highs and higher lows, and higher lows, sorry, not higher lower, higher lows, okay, that would be this scenario right here. Create a low, a high, a higher lows, a higher high, higher low, higher high. So this is a trending market condition. Okay, this is a trading market condition. Now we have another one here. So market creates, the vice versa of it will be market creating a high, a low, a lower high, a lower low, a lower high, a lower low. Okay, so this is a trending market condition. Okay, that is the difference between a market environment and a market condition. Okay, so now in the market condition, that is where you identify your market environment. Okay, in the market condition, because during the process the market is in the condition, is going to be creating an environment, which is the corrective and impulsive move. Okay, so now the consolidating market, this is when price is stuck between two ranges, a high and a low, without showing the indication of leaving the range anytime soon. Okay, so now this is for bullish uptrending market. Okay, so price creating a low, a high, a lower, a higher low, higher high, higher low, higher high. So this example right here is a trending market. Okay, so this is a trading market. Then this is a consolidating or ranging market. Okay, this is price stuck between this trading range low, trading range high, stock just moving between these two ranges, right? Price is moving between these two ranges. Okay, so now that is how we know our market condition. So what I actually missed today was my market environment. Okay, so even if you have your bias in mind, okay, you should also pay attention to your market condition, right? So like when we talked about reaching for this, for the fair value gap that was resting above here, okay, the weekly fair value gap that we traded off here, right? So there were time the market was correcting, expanding, correcting, expanding, consolidated and expand. Okay, so now that is just that. So this will be a scenario of an uptrend, right? This is a trending market right here. This is a trending market. Price created higher highs, higher lows, higher highs, higher lows. Price creating a low, a high, higher low, higher high, higher low. It's not actually going to be in a perfect way like the textbook describe it. Okay, it's not going to be actually clean lows, clean highs, clean lows. There are going to be times when there are going to be this kind of move. Okay, so now this is the retracement right here. This is the retracement. Okay, so because this is the low that broke this short-term high, right? So we make reference to this low. Okay, until this low gets violated, our trend is still bullish. Okay, when we talk about market structure, the low that actually broke the short-term high in terms of uptrend is the low that we pay attention to. So in this example, we had this low right here, right? So we had this high creating a higher high, then we had this low, we had this failure swing. Okay, then it broke down. So you this should not be seen as a change in trade. Okay, this should not be seen as a change in trade to being bearish, because this is our swing low. Okay, in terms of this trading range. So we are looking at this low to this high, because this is the low that broke the short-term high to go higher. Okay, creating this higher high, right? So the swing low in terms of an uptrend that broke the short-term high, creating a higher high, is the one we pay attention to for our shift in market structure, right? So now we have this and we have this. Okay, we have this move, then we have this. Then you might ask, then why did we indicate a change in trend when we broke this? Because this is a swing low, right? And market broke the swing high. So tracing it back to the root, this is the swing low that actually broke this short-term high. Okay, so when we traded below it, that was what indicated that we are currently bearish now, that the trend has changed from being bullish to bearishness. Okay, so now in this case we have this swing high come down. Okay, we have this swing high trading down and creating this swing low, right? This is our corrective phase, right? And breaking down. Okay, that is why I'm using this as my trading range high, because this is actually the swing high that broke this low, that broke this short-term low, creating our lower low, right? So if this trend is to change, right now, this swing high have to be taken out. Okay, otherwise we see something like a high created, and otherwise if we see the swing point being formed, right, we see like this low being created right here. If we see a swing high created if we see a swing high created here, and trade lower than this and breaks this short-term low, and go and trade upwards, that will give us the tip off that our trend has changed from being bearish to being bullish. Okay, so until we break this swing high, we are still very much bearish. Okay, this is all just the corrective phase, right? This is all just the corrective phase like we talked about. Okay, unless price creates a swing high right here, trades down, breaks this swing low from this swing high, from this short-term swing high that it created here, breaks this swing low, this short-term low, and trade and went up and breaks the swing, the supposed swing high that was created here as well. Okay, that will indicate the change of the trend. Okay, I don't know if you are getting the picture. Okay, so that is that we are still very bearish until we break this short-term high, or otherwise a new short-term high is created right here, and breaks from there. It breaks downwards, grabs liquidity, and break up like the second pattern we see on the one of the swing points. A low being formed, and just like we can see here. Okay, this low is being formed, and a lower low, and goes up. Okay, if we see this kind of pattern right here, we will know that this trend has changed from this. So unless we see this pattern be created here, so that is what is going to indicate that this trend is now bearish, it's now bullish. Okay, so for the now, this is our swing point, this is our swing high, okay, to this swing low. So this is our current trading range. Okay, so we are very much bearish, but the market environment right now is retracement. Okay, we are in the retracement phase. Okay, we are in the retracement phase, and we are still hoping to go below this old low, right? So in other words, price might likely reach into this fair value gap today. I have not really looked at it, and you can see the time that I took this chart for this presentation. we are still having 2 hours 38 minutes to go for the day, okay, because this is the daily time frame, right? So we have 2 hours 38 minutes to close for the day, okay. So price might likely reach for this fair value gap today, or it might likely trade tomorrow higher into the fair value gap right? So that would have given us, that will give us our, you know, our change in how am I going to put it? So that will just be what we'll be focusing on for the now, okay. So that is what I learned today, and that is what I actually experienced today, okay. So like I said, trading comes, the best teacher so far is always experience, okay. So I am sharing this with the community, and I hope you learn one or two things from it, okay. So please guys, I would seriously like to plead with us, please, if you have not subscribed to this channel, please do so, please subscribe, okay. The numbers of viewers that have subscribed and the ones that have not subscribed, there's a big difference, okay, in the numbers, okay. And I want it to be the other way around, okay. I want it to be the other way around. I'm putting out my time, my effort, my resources to put out this free content for us, okay. And the only way to appreciate us, although I'm grateful for the comments, for those that have subscribed so far, okay, but if you haven't subscribed, please, it's free, it won't take much time, it won't take more than 5 seconds of your time, okay. Just click the subscribe button, turn on the notification bell to get notified, okay. And like I said, I promise us, once we get to 500 subscribers, I'm going to be doing a live session trade with every one of us, okay. On each trading day, I'm going to be sharing my charts live with every one of us, okay. I actually created a telegram for this community, okay, but I'm going to be adding the link to this video from now henceforth. I'm going to be adding it to the daily life experience series, okay, because this is going to be continuous. This is not just going to end today, it's not going to end next week, okay. I'm actually going to be doing this every trading day, every day that I go into the market. I'm going to be sharing us the breakdown of the analysis, okay. So thank you for joining us today. I hope tomorrow actually gives us a better transaction than today, okay. So see you guys tomorrow, and have a good trading week.